Welcome to Thursday Night Stock Charts Live. We're going to be talking about the uh, the price action on the major averages, and we'll be talking about the reaction by the market to what have been, by and large, fairly good earnings out of corporate America. In particular, the Magnificent Seven, as they're calling them now, that have been driving up the markets up higher for the past year and a half. We'll talk a little bit about, and this is going to probably drive people crazy, and that's okay. We're going to talk a little bit about why I'm getting a little bit bullish. And you may be saying, wait a minute. Haven't you been coming on here for the past year saying, get ready for the sell-off? Yes. Actually, 2 years, because we had 2022. But that doesn't mean we're not going to have a counter trend rally. I'll talk to you about the indicators that I'm looking at that should give us a Santa Claus rally after the first of the new year. What does that bring us? Probably not good stuff. But we want to leave on an optimistic note. I want to try to stay pretty brief with my ordinary topics, so that way I can do a lot of chart requests. I know a lot of people are concerned about their portfolios. Perhaps they're worried about where is support, where is resistance in the stock market. We'll talk about that, and we'll talk about support and resistance levels on your individual stocks as well. So let's get into it. I'm showing like 2 people on. That was 7, now 2. That doesn't seem right. Something's wrong. They're definitely wrong because I got multiple people in here. Sean, boo. Welcome, Sean. Mr. Pete, good evening. Franklin, good afternoon. And what a day. Bob tells us about it and what to expect. Thank you, sir. Seymour Rivers, thank you. Always appreciate that. Trader Isaac, welcome. Welcome. Smash, like, you know the deal. All right, let's get to it. So we had Microsoft, Google come out. They reported earnings. Meta reported. Boeing came out, reported. Amazon, we'll talk about Amazon's performance after hours in a moment. Chipotle out tomorrow. ExxonMobil and Chevron. I think Chevron's buying Hess, so that's probably going to be a nothing burger report. Usually the energy stocks nothing burger reports. So let's get to it. Let's talk. Thank you, Sean. Let's get to it, and let's talk about earnings report. Amazon shares pump and dump. I tried to short them after hours, and I couldn't get it. I'm looking at resistance that was above. I was off like 75 cents. All I needed was an additional 75 cents. I would have been in, but wasn't to be. So I canceled that order. So they had a solid beat. No argument there. Good numbers. The problem is forward-looking guidance. It's not looking good. So they're, in short, seeing softness in the economy. Let's check out their earnings report. Well, their after-hours price action, I should say. Well, they've since rebounded somewhat. I mean, last time I looked, they had given up all of their gains. Now they've popped back. Now they're positive on the session. And right above here at around 27.75, 27.50 is a resistance level. I don't think we're going to hit it tonight, but I would be looking to short into that strength. So members, perhaps tomorrow we may be getting short of Amazon on any spike up in the equity markets. Now, looking at the companies that have reported, this is from Carl Quintanilla from CNBC. For the 29% of S&P 500 companies that have reported third quarter results so far, earnings are up 11%. Bravo. But without the contributions of the Magnificent Seven, we know who they are, EPS growth would drop to negative 8.6 on the SPX. Again, absent the Magnificent Seven, EPS growth would drop to a negative, not a positive, a negative 8.6%. That is horrific. So when you put into context how horrific it is, you start taking a look at names like Meta. We're going to come back to this chart. They reported last night, annihilated today. Let's go to a weekly chart to get a better view here. Weekly chart. If you want to take a look at Microsoft, which initially rallied, we're still up on the week, but look at the chopping tail on top of this weekly candlestick. That's not good. We're still positive. What else do we have? We did Amazon. What do we have up here? Google and Microsoft. Oh, I already did Microsoft. Google, of which we now have a trade on in Google. We're going to go over the small account trade in a little while. Look at Google, annihilated today. And this is going lower. It's going lower. So these names are beginning to weaken up and weaken up really, really bad. Apple, up on the week still. Oh, this is the Apple VIX. Wait a minute. I knew something was wrong. Apple. Now that makes sense. Lower highs, lower lows. This is a huge component of the Magnificent Seven. And when Amazon goes, excuse me, when Microsoft goes, which is probably going to go very, very soon, look out below, because this is the largest component, along with Apple, of the triple Q names. Look at the price performance today on Microsoft, a bearish key. I shouldn't say that. It's actually a bearish engulfing of the prior day's move, or close to it. So if you don't know what that is, 5-part video tutorial below, my top 5 favorite candlestick patterns. It's free. And this is not textbook outside reversal bar, more of a reversal day. So we're going lower here. And we'll be looking to short Microsoft. Now, you may be saying, how has your week been so far? How are we doing? It's been a great week. I did break a rule, and I beat myself publicly up over it. We shorted CRM. We did that the other day here on the 24th. It broke down. I didn't capture this whole move, so I didn't go get the entire move of this day, but we still made a nice coin. What else do we short? Netflix. We shorted that last night, followed through today. What else did we short? I forget what else we shorted. We made money on it. Intuit. INTU. So we shorted that back here because what we saw was a bear flag setup. The market was weak. The probable resolution was to the downside, especially in light of the fact that we had broken strong support. These are the trades that we're looking to put on. And after hours today, during business hours today, one of the final minutes of the trading day, we shorted Lockheed Martin. And we'll look to go adding more to this. I'm not overly aggressive right now, but that GDP report, which we spoke about, which we'll be speaking about later on, was not good for the defense names. They saw a decrease in defense spending, so not good. And I immediately took a look at Lockheed Martin. They wavered, they moved lower, and then they rallied back to go positive. And then by the end of business, they faded on the day. So this is a little bit more of an intellectual speculative name, trying to use my fundamental and macro analysis in terms of trading this stock, and of course technical analysis, but it's not an aggressive short yet. We are putting in a rounding top. We need to break support at around 441 and close down below that mark. If and when we do that, we are going lower. Remember, this entire rally was purely purely Israel and Hamas. If there is no war, God forbid there's no war. Oh, God, all the elite over in Washington, what do they do with their donors? God forbid there's no new war. The stock drops like a rock. And you have a new Speaker of the House, very, very conservative, doesn't like war. Guess who's that's not good for? These guys. More to come on this trade. All right, so we've had good earnings for the prior quarter. Guidance not looking good. And the problem for the equity market is this, is that if people get burned in this market, they're not coming back for a while because they don't have to. And what do I mean by that? Well, if you're going to the stock market and you're trying to get a dividend yield, well, why do you need to do that? Because the dividend on the S&P 500 is now lower than what you could get on fixed income. Why take the risk? Now, I'm speaking as a civilian, not as a trader. I would never put money into fixed income, but that's just me. Not a lot of people will. If they get shaken out of this market, they're going to go into money markets, they're going to go into bonds, and they're going to collect their dividend, and they're going to be happy with it. So this is not good. Warning, the yield from cash now exceeds that of stock. Think about it. The yield from cash now exceeds stocks, making the latter very unattractive at current levels. We're very expensive. We're going to go to how expensive are we, Bob? We're going to go to that in a moment. I think, hold on one second, folks. The link didn't work for somebody, so let me pop that in there for them. Thank you, Franklin. Appreciate that. Franklin beat me to the punch. Cool. Thank you, sir. All right. So in the 1980s, equities experienced volatility but continued trending higher. However, in 2000, markets collapsed and the dot-com bubble bust. That sent people saying, whoa, I can't take this anymore. And they're going to go to fixed income. So how expensive are we? Good earnings, but we're still sporting a PE ratio of 28.28, quite expensive and frothy. And according to the Buffett indicator, we are still very overvalued, and we are overvalued by 1.2 standard deviations. So we are here. We need to be here for fair value, this gray line. And usually when you get a correction in the stock market, you don't go down to fair value. And a good sell-off, a good capitulation, you go down below fair value, and then that's when the Warren Buffetts go stepping in there. They get loaded up and they go marching on CNBC. I think we have a bottom. Why? Because they're loaded up now. They bought value, and now they'll goose the market up higher, and they get paid. The key is that you need to be liquid. I'm going to keep hammering this home. I've been saying this for quite a while now, is that we need to see this market for what it is. It's a dangerous, dangerous market. There's a lot of money to be made, but most of it by selling premium like we do and by being short like we are to a certain extent, not as short as we were. So it's a good week in terms of our strategy. We did put on some trades today. Volatility has risen, allowing our put writing business to get on track. That kind of got off track because earnings were coming up, and I didn't want to do any earnings trades, too much risk. And we put on a spread today on Boeing, Google yesterday, bought a little bit of Meta today, and we'll keep building on that. Looking forward to a rally. We're going to be talking about our Santa Claus Rally portfolio in a moment. We'll be talking about the small caps. We'll be talking about the Qs and how they are in terms of seasonality. And we have the charts to go along with it. So the markets are still very expensive. We have sold off. It's not over, folks. It's not over. Let's not get let's not get complacent. Let's not think that this is the bottom. It's not. Are we going to get a tradable bottom soon? Yes, we are. Will we probably roll over and head lower? Yes, we probably will. Might it be next year? Quite possibly. Let's continue forward. So we had GDP, which came out today, and something just doesn't make sense. Like their non-farm payrolls, it doesn't make sense. Nothing makes sense with this administration, these crooks, these demons, these devils. And I wish only the worst for them. So GDP jumps 4.9% as the economy speeds up. Okay, the economy speeds up. Think about that for a moment. What do you think about when the economy speeds up? Well, you need shipping. All right, you got a lot of goods that are being shipped. You need packaging. You got to have packaging. People are buying stuff. You got to have that, right? That's like the bare bones of what you need to have a 4.9% GDP. It's a mandatory thing. You got to have shipping, trucking, freight, railroads, tankers, etc. Okay, let's see how they're doing. Are they validating the GDP number? This is a weekly chart of the Dow transportation sector. Does this look like a sector that is expecting continued 4.9% or had 4.9% growth in the past quarter? I think not. If you want to make the argument that, you know what, Bob, maybe this rally here was the rally during that GDP read, all right, maybe I'll go along with that. But the rest of the market was rallying as well. So I don't put all too much credence on it. And if this market rally was in anticipation of a 4.9% forward-looking GDP print, then what is this chart telling you now about forward-looking guidance for the GDP numbers moving forward? It doesn't look good. That keeps going off for a reason. Let's go to that. Stop that noise. Okay. So something's not working here. Something's not right. The fact that we have GDP reported as 4.9%, yet we have the Dow transportation sector, which is in a nosedive. Give me a break. Also, you want to take a look. I forget what the name of it is. It's a packaging. We went over this on Thursday night. I meant to have this ready. You know what? It's not on this chart. It's on one of my older charts. Here we go. Dow Jones Packaging Index. Now, this is a weekly chart. You want to tell me that this economy is seeing nearly 5% growth? How stupid do they think we are? This is a sector that had a double top back in mid-2021. We have been in a downtrend channel ever since. This thing can go a lot lower. Here is your double top confirmation breakdown. We did so back here in March of 22. Then again, it was very porous. Then ultimately we broke down in June of 2022. That's over a year ago that we broke down. Yet we're supposed to believe that a 5% print on GDP required no packaging, none whatsoever. Didn't require all that much in terms of transportation. Give me a break. So if we have a 4.9% GDP, then surely the Federal Reserve must be standing at the ready, this month to raise interest rates to stamp out this inflation busting number? Well, let's take a look. Here's the CME watch tool. This changes from time to time. Let's refresh it. Nope, no change there. There will not be an interest rate hike next week when they meet. Well, maybe in December. Maybe in December, they're going to raise interest rates to fight this amazing growth that we're seeing in our economy. Surely they have to do that, right? Didn't Jay Powell say he was going to raise 2 more times before the end of the year? Well, he's got November, no rate hike. He never disappoints the market. Maybe December. This went up from yesterday, no rate hike. Yesterday, this read was at 69.1% that the Federal Reserve would not move on interest rates, no rate hike. So you would figure this morning, you get GDP ripping through the ceiling, that this number would go down, this number would go up because now the Federal Reserve's got to take action. The economy's too hot. Inflation is going to rip up higher. Nobody believes them. Nobody believes them. This actually rose. More market participants believe now there will be no rate hike than they did last night before the 4.9% print. You can't make this stuff up. And why are yields going to continue up higher? They did pause today. They had a very, very good bond auction today. But China continues to dump our debt. They have to. They don't want to. They have to. The reason is that their economy is so weak that they need to sell our treasuries to raise dollars. And with those dollars, they're pumping money into their economy to keep it from falling apart. The problem is it's not enough. So they're going to need to continue dumping treasuries, sending yields here up higher, unless, of course, the Federal Reserve decides that they are going to raise interest rates. Is that in the cards? Well, to do that, we need to take a look at the Federal Reserve's balance sheet. What did they do last week? I haven't looked yet. And it continues to drop like a rock. We're down. Wow. We're down about $100 billion off of their balance sheet in the past 2 weeks. That's mind-boggling. That's mind-boggling. So if you're wondering why yields are moving up higher, it's not just China. It's not just Japan selling. It's the fact that the Federal Reserve is not buying, right? And that eventually is what the politicians are going to get Jay Powell to have to do. But they're going to have a more difficult time now because you have a conservative Speaker of the House. Now, let's talk about optimism. You know, we can be optimistic that we're short the market, still short using the SQQQ, comfortably short, not overly short. We have a lot of capital to do a lot of things. So what do I mean by comfortably short? Let me just throw that out there. I want to be able to sleep at night. I want to be able to wake up, and if the markets begin to rally up and into resistance level, I can add more to a short position. I'm not that levered up to the short side that I'm not maneuverable. I do think that we're going lower. Today was not the bottom. If they rally it tomorrow morning, guess what I'm going to be doing? I'm going to be shorting it. If they sell it off hard, we're going to be looking at support levels. We'll talk about those support levels in a moment, so stick around. And we may be looking to buy the small caps and buy the triple Qs and maybe even some transport names. So stick around and we'll talk about that in a moment. This chart here, I laugh at this. So I love economics. I never went to school for it. Beethoven just sat down on the piano. Not that I'm any Beethoven. Don't get me wrong. At all. I'm far cry from a Beethoven. So please don't torch me. Beethoven sat down and he just started playing music because it just made sense. I started reading about economics and read about politics. I knew it just made sense to me. It just came to me. So what's funny is that the money managers out there that went to the best schools, they appear on CNBC. All they're doing right now is panicking. And all the while, they should have been raising capital at least a month ago. How do you not see this coming? How is this not apparent that this was coming? So what this chart tells you is that you have these asset managers that are out there. They are just dumping equities hand over fist. They're panicking. And in that panic, that's when my contrarian antenna go up. I got to say, okay, if these guys are panicking, that means there's blood in the streets. And I got to start shopping because I know that there's going to be a counter trend rally. Is it today? No. Why? Because levels matter. Sentiment matters. When all of these stars are in alignment, then we're going to go stepping in to the breach when we get a bloody sell-off in the morning like you can't believe. You're going to wake up. The futures are going to be bright red, and they're going to send this market down huge, huge. You're going to think there's no coming back now. Run for the hills. You got to be buying. And you got to ask yourself the question in advance of that opportunity. Are you liquid? Do you have the capital reserves? As Gordon Gekko said in Wall Street, can you piss in the tall straw with the big dogs? If you can't, then you can't play the game. So if you're on margin, think about that margin. Maybe lighten up. Consult a financial advisor. So long story short, there are a lot of opportunities out there. So here's your friendly neighborhood fund manager, your asset managers. They were long right to the top, and they puked, and they continue to puke. They should have been legging out all throughout here, and they're not. They're dumping like with reckless abandon now. They should have been out a long time ago, and good. Let them blow out stops. That'll take stocks down lower, and we'll be there. What will we be looking at besides support levels? Simple. Bulls Bears Index. This is a daily chart, and you can see that we're in a downtrend channel. This is probably going to go lower. Is this updated for today? It is. I'm surprised that we were flat on the day today. We need to move down lower here, and then we'll be looking to load up on equities. We're not that overly bearish yet. Here's a why is this not giving me? Come on. Jesus Christ. There we go. Okay. So we peaked out here in July, and ever since then, we've been trending down. Now, we're not at extremes yet, right? So we're not ready yet to take our dry gunpowder and move into the equity markets with any size. Because when I talk about getting into this market with size, we're going to be legging into IWM, legging into the QQQ, and building a position slowly but surely. And then when we had that capitulation sell-off morning, bam, whacking the bid, and then enjoying the rally up higher. Right now, we got cash on the sidelines. We have a short position. We're feeling good. What else are we looking at? Put-call ratio. Now, you can see the level of puts versus calls is rising. Let's try to clean this up a little bit. I'm going to keep the third standard deviation Bollinger Band on there. And normally, what did I do? There we go. Normally, when you get up to this line in red, like you did back here in April, that's when it's time to start looking to buy equities. There's too much bearishness out there, too much put buying. It's counterintuitive. One might think that, wow, everybody's buying puts. I got to get short. No, the herd has gone too far, too fast. And now it's time to take the opposite direction on the equity markets. That's why we're contrarians. That's what we're looking for. So more to come here, members. Let's go to comments. Hey, Bob, it's time to go into Microsoft? No. RB, no. Microsoft's still expensive. So we'll go over the chart of Microsoft. We're probably going to be shorting it. So I would not go buying Microsoft. Jody. Hello, Jody. Michael Anthony, I have great to go long on SBSW, which gold and many other metals does pay a dividend. Two more about the company. I can't tell you about the company. I can look at the chart. When it comes down to individual names in the mining sector, you know, if it's not a large cap name like what's the name? I'm at a loss for a couple of names here that are large cap names. Just buy the ETF, because there's a lot of scams out there. So, and I believe what you're talking about is a junior miner. You got to be careful. I just prefer to buy the GDXJ. Gives me exposure with diversification. You have two different wars, which is bad news. Yes, but that's going to be a problem for them with this new speaker. OLLI. I love the graphics that they did, but it's hard to read. So bear with me when I try to read and I look like a knucklehead. I was thinking Google would bounce GOOG or GOOGL. We'll go over it. I have a position, and as a matter of fact, we'll talk about that now. So let's talk about the small account. You can see that we took a hit. We were up here on this account, $21,121.65. I opened this account back in August, on August the 11th with 20,000. So we built it up. And the mistake that I made with this account was that I got too big with a strangle on Meta. And I had to take a loss before earnings. And thank God that I did, because had I kept that position on today, this account would have been down thousands, So our strategy paid off. And let's take a quick look at Meta, and I'll explain what we did here. And if you want to join in the small account club, simply just, I got to touch that. We're going to go to that in a moment. Go to the link below. I changed it from 30-minute chart club to small account club. We're going to have private live streams coming up soon. Right now, they're going to be public until we build up an audience. So more to come, different in 2024. Right now, they're public. Soon to go private. Enter your email address below to get invited. We're scheduled to go live on Saturday, this coming Saturday. So Meta, we had what you call a strangle on, 295, 300 put side, and a call side that was at around 245. Now, I was hoping for some time decay. The problem is that while time decay has on those options really evaporated now, the implied volatility was getting too high. Speculators were bidding the options up too high. So I had to make a decision early on in the week. Or was it last Friday? It was last Friday. Do I want to hold this position, take a small loss, or do I want to risk it going into earnings? The answer was obvious, that I had to take the small loss. Don't wait. First out, best out. And if I would have waited much longer, I wouldn't have been able to get out with such a small loss. So it was the wise thing to do. We are now in a Google trade. We sold some premium here yesterday. We sold some 115 puts. We're down on that, but we're up on the calls by 48, nearly 49%. So what we're going to be doing tomorrow is rolling out of these calls and rolling down to probably a I don't want to get too aggressive. These options expire in December. So I'm anticipating a rally in November. So we want to be very careful with reducing our call side ceiling. Maybe we'll go to the 136s. I'll probably feel more comfortable at the 137. That's a 10 delta, and we'll generate a little bit more income. But we want to stay small. We want to stay nimble. And these options are still very expensive post earnings. And on any rally, the IV, there'll be IV crush. And I'll show you what I mean by that. So usually after earnings, implied volatility comes in quite a bit. Now, this has come in a little bit, not that much. This should be right now down in the teens. It's not. It's still at 39. So if they take volatility out here, out of Google options, that trade will become profitable very, very quickly, especially as time goes on. We get time decay and implied volatility crush. So if you're not on our email list to get invited to our live streams, link below, the small account club, and we'll be building up this account even better and bigger in 2024. Okay, let's go to we have 638. I want to blow through these charts really quick. Clark, no, I did not cover TLT. We will go over TLT in about 3 minutes, 2 minutes. Like Microsoft was up on earnings, but today whipped out all those gains. Yeah, so all it's going to do is trade with the market. Nothing bad about it's a great company. It's a great company, but it's going to go with the market. I mean, look at Apple. Apple could never go down, right? It's going down. Sean, Bob, what do you think about 3M's resistance levels? Let's talk about that. That's a good one. I'll go over that in a minute, Sean. You got it, Clark. Okay, let's talk about the yield curve, folks. And this is the indicator that we've been using to show that there's a problem in this market and that when we began to steepen, expect to sell off on equities. If you're new here, you don't believe what I'm saying, go back to any one of my live streams going back the past year. I'm a broken record. It's the same thing over and over again to drive home what is happening here. And we are not done. So the yield curve on the week is actually down a couple of bips. But on the month, it's undeniable. There's a major, major steepening going on here. And we only have a few trading days left to go in this month. So I would caution, if you are on margin, consider lighten up. What is your edge? If you're on margin and you have a position that's not performing and going down, you got to ask yourself the question. I just shared with you my account. I had to take a loss. So-called YouTube guru, right? That's about BS. Everybody takes a loss. If you're not taking a loss, well, okay, show us your portfolio, all right? Look, I don't believe that for a heartbeat. Everybody, the best of the best, takes a loss. It's just a matter of which you take that loss. Do you take it like a gentleman, as an adult, as a professional, take it small and understand why you're taking that loss? Or are you going to go through life with blinders on and allow yourself to blow up your account? I've done it a couple of times when I was younger, blew up accounts. It happens. But you know when you turn the corner, when you got to take that loss, I don't care. Look, I'll bring it up again. This is not a matter of shame. We were higher. We're still up since August on the account, yet we're off of our highs. We took a loss, a setback. Now we're repositioned. We're ready to go up higher again. So is there any shame? No. I'll probably get a couple of nasty grams over the course of the replay out there being toasted. It's okay. It's fine. I don't worry about that. If you take a loss, you take a loss. Not a big deal. Good show here. I like Risk Reversal, Gaia Dami. I don't like him, though. She's great. She's great. She's from SoFi. What's her name again? I follow her. Dan Nathan, I can't stand. Liz Young. Awesome. Great YouTube channel. Follow you, Liz Young. Okay. So the yield curve is steepening, folks. If you're not going to heed the warning, you're going to have to live with the consequences coming down the pike. And what you've seen recently is nothing compared. This has been an orderly sell-off. In the grand scheme of things, I've been through multiple bubbles and I don't know how many corrections. This is a fairly orderly sell-off. It is a meltdown. There's no, every bid gets hit. Every bid gets hit, wiped out. So this is not the time to go all in. What we need to start doing is saying, okay, where are my support levels? What makes sense to get long here? Well, we spoke about being somewhat bullish earlier when we take a look at the fact that you have asset managers that are puking their positions out. Good. I love to see them panic. They're supposed to be the smartest guys in the room. Now they're panicking. I love that. We're liquid. We're going to eat their lunch. That's what I love about this business. I showed you the bulls-bear sentiment. It's getting favorable for bulls. Not quite there yet. We showed you the put-call ratio. Getting favorable for bulls. Not quite there yet. The 10-year yield beginning to show signs of weakness. Daily chart. Outside reversal bar today. One of my top 5 favorite candlesticks. Link below. 5-part video tutorial. I looked at the stats on that page today. I have over 9,000 people that have clicked that link. And only like 800 people signed up for it. I think it's my landing page looks like crap because I looked at it. I was like, oh man, this is terrible. So if you go to that link down below and you think the landing page looks like crap, I agree with you. So I digress. TNX, outside reversal bar. It looks as though we are peaking out here. This is equity bullish. The question is this a consolidation or are we getting ready to break down? Sorry about that. I can't mute this. So TNX weakening up here a bit, but it's not enough. It's not enough. And think about it. We had a 4.9% GD print. Bond yields went down. What does that tell you? It's telling you that whatever they did, they're not repeating it. TLT, 20-year bond ETF. This is for Clark. So I want to be more bullish here on the TLT. The problem is that while we could quite possibly have seen the lows here, especially considering that the weekly chart of the 10-year, I know this is a 20-year bond ETF, they usually trade inversely of one another either way. So the TLT, 20-year bond ETF, nice reversal week. The problem is this. If you look at a daily chart, you'd swear that you're done going down and you're probably going up. And we may be. We just may be done going down. The problem is that we have yet to recapture weekly support at 85. We closed at 84.73. So while this is a pretty good reversal bar on the week, it hasn't really done anything yet. except rally off of its lows. Where I would be very, very excited, but the problem is it's so far away, is down here at 77.47. I don't know whether or not we're going to get there within a short period of time. Not the way the 10-year yield is setting up. And you can see that if we do continue to break down here, that we could easily hit that support level. That's the support level I am ideally liking. I would love to sell premium down there, sell puts down there. But I think what they're going to do is they're going to rally this, and then it's going to get rejected. And then we're going to melt down gradually. When I say melt down, I don't mean like a nasty sell-off. I mean a slow melt down to that support level. That's what I think is going to happen. Now, when we take a look at a daily chart, which I haven't looked at yet, maybe that'll change my tune. Daily chart, good day, but no breakout yet. You know, we got to breakouts matter, levels matter. And there we're at. We're kissing the upper band of resistance on the TLT. Now, I would love to say, bravo, let's buy this sucker. We can't. You show me a close above 85 on the week, and then we'll have a different conversation about TLT and probably getting long. Now, when you look at RSI, bullish. Momentum, as measured by Stokes, higher low. No breakout yet. RSI is beginning to break out to new higher highs, bullish. So there are reasons for optimism here on the TLT. The primary one being, it looks as though the 10-year yield is rolling over. Bob, I know you're much better understanding on the charts and fundamentals also, which I'd like to speak to you over the phone if we could. There's a link on the website. Just schedule a call. Okay, that's the best way to do it. I'd be more than happy to, Michael. ATL for TLT in the 80s, I think. Short term, no, not the way the bond yield is looking. I think that we may move up higher. A close above 85 on the week will have us moving up higher on the TLT. Probably a dead cat bounce. It'll probably fail, and then we move back down to the 70s in the TLT. That's my take for now, subject to change. Now, the tip market is having a really, really good week this week. We're at the highs of the week, quite possibly putting in a higher low. I don't want to get too long in the tooth on this, but this is looking good. But it's also telling you that investors are building a position readying for higher inflation. The dollar, weekly view, very, very bullish. There's a contrarian way of looking at this. And it's the one I think is going to play out. So the dollar broke down last week. And this week, we've rallied back. The problem for the dollar is this, is that it has not been able to recapture former glory, former support, which is a close above this former lower band of support. That support level is now acting as resistance. So this is a retest week. And what makes me more confident than ever that we're probably going to fail here, we're going to sell off on the dollar, I think it's due to the fact that you have a daily chart. There we go. It flashed a big gap up today, and it faded off of its highs. Now, we broke out yesterday. Might we pull back to retest the 106 level? Sure. If we fail to hold 106, dollar rally is probably over for a while anyway. Now, one of the reasons, or two of the reasons why the dollar may hold strength. I think Clark just beat me to the punch here. The yen looks hella scary for dollar strength, though. Yeah. So I was just about to get to that. So the yen, excuse me, euro. This is a bear flag setup. I think we break on the euro. Also, as Clark mentioned, the Japanese yen, which broke out a month ago, no follow through whatsoever. And it looks as though we're about to break, at least retest prior support, last seen back in October of last year. This has gone nowhere in the past year and could quite possibly be at new 52-week lows tomorrow. Volatility. We're down on the week, if you can believe it. Let me refresh this. Yep, that's accurate. We're down on the week, which is shocking. Daily view. We faded on the day. Now, this is not a bullish candlestick for the VIX. It's telling you that there's a little bit of trepidation out there, that some people are selling their VIX insurance policies. So while there's still net buyers out there of VIX contracts, some of them are selling, and they're probably looking to get long at some point in time in the future, but they're taking their hedges off. Dow Jones Industrial Average, we're at key support. We bounced right off of it, 32,743. S&P 500, we're not done going down here quite yet. I think that we're going down to 407. We closed at 412.55. So that is weekly support on the S&P 500. For the triple Qs, the week is not over. One trading day left to go. But I mentioned this to members that 345 is critical support. We sliced through it like a hot knife through butter today. So where is support level after this support level if we do, in fact, close down below it on the week? $337. $337. If that fails, it's the Talon price target. Talon's one of our members. 321. He called this price target about 2 months ago. So we hold this in honor of him. And that's where I think that we're going in the short term, 337, if we fail to rally back. If we do rally back and close above 345 by the end of business tomorrow, that means we're probably going to get a rally next week in the equity markets. The banks, train wreck, avoid. Technology, down on the week, but no breakdown, still holding support. Bearish key reversal bar, one of my top 5 favorite candlestick patterns, link below, 5-part video tutorial. Semiconductor sector, another bearish key reversal, broken support, continuation breakdown. Got to have your semis. NVIDIA is a basket case. Second consecutive down week. I mean, today alone, how much were we down? They report earnings next month, down nearly 3.5% on the week. LABU, members are going to like to hear this. I pulled this chart up, and I was actually excited about it. I think we're going to be buyers soon, especially if they close us higher on the week. There's no historical support below, so we need to rely upon price and volume action to guide us with our buying here. We own a little bit of it. I want to buy more of it. We're bouncing along the lower band of support. Volume is probably going to come in below average this week. Let's go to a daily view. Nice reversal bar. Equity markets down, LABU up. This is a biotech ETF, leveraged ETF, not for the faint of heart. Very, very bullish. Relative strength. You'll always love relative strength. Staples. Oh, these are going to break down. If you're thinking, I'm going to buy some Pepsi Cola, don't do it. It's not time to buy staples yet. They're probably going lower. Beware. Discretionaries going lower. Emerging markets going lower. Strong US dollar, bad for emerging markets. These are going to be a screaming buy in the coming months. We'll check back in then. What chart is that on? What symbol, Michael? Oil breaking down. 4.9% GDP growth, and oil is rolling over. I guess we don't need oil for GDP. Gasoline prices. Nice reversal week. Good for the consumer. Bravo. Finally one for the consumer. Boil, of which we are long. This trade is finally working. Really, really, really good price action. And this is why it pays to have a little bit of diversification in your trading portfolio. We're long of Boil. We're just about flat on it now. I think we're still a little bit down on the trade. We're looking for a breakout here. And if we do get the breakout, especially in a weak market, we'll be looking to add more to this trade. As far as I'm concerned right now, we're still consolidating. So more to come, members, when we add to this position. And this is what you call a bull call spread. Some call it a debit spread. Whatever you want to call it cupcakes. It's the purchase of a deep in the money option, simultaneous sale of an out of the money option to help finance the trade. And we go out a long time. We're out into, I think, January, February of not 2024, but 2025. No time decay. Gold. Weekly chart. Up on the week. Is it time to buy gold? You could argue that. Daily view. Well, I'm on the monthly chart by accident. Beautiful chart here, monthly time frame. This is a buy all day long, assuming that we close as strong as what we're doing right now. Daily view. Great price action. So is it time to buy the mining stocks? No, don't do it. Yes, gold and the gold mining stocks are correlated historically. The problem is that when equities go down in a correction, a major correction, GDXJ, Nugget, gold mining stocks go down too, a lot more than gold does. Gold will hold its value as it should because money's seeking a safe haven in gold, out of equities, into dollars, into gold, into silver, into platinum, into palladium, into bonds, into utilities, which held up well today. They're not going to go into the gold mining stocks yet. Now, if oil collapses, equities sell off, and these names go down as well, that collapse in oil prices makes these stocks beautiful, because the highest input cost of gold mining stocks, oil. And if that price goes down, guess what happens to their margins? Guess what happens to their margins if oil goes down and gold goes up? Beautiful play. So we're going to be getting aggressively long of the gold mining stocks. Not yet. Let's do some chart requests. All right. I want to talk first about seasonality. We're going to go over a little bit here. That's fine. So seasonality on the small caps. I like this daily chart of IWM. We're at the lower band of a trading range. Short interest continues to rise. What does that tell me? Shorts are getting ready to get squeezed. Don't forget, asset managers are dumping. What does that mean as it goes into the back half of the year? They're going to have to chase this market up higher, or else they're going to be sending out their quarterly statements showing them that they They were mostly in cash as the equity markets get a seasonality run. So it's my guess we're going to get that. I'm not predicting it. It's 50-50 at this point, but I think that we're probably going to set up for one as we move into November, especially if we get a dramatic sell-off tomorrow, next week in the equity markets. Then the algos will start buying up. We'll be watching the options market very, very closely. I have special tools now that I shared with members that show me the money flows of options in advance of equities move. So if you start seeing call buying on the part of retail or institutions, guess what those market makers need to do? They got to hedge that book, and they need to go in and they need to buy stock. If somebody's going to buy calls on the SPX, on IWM, on QQQ, well, that market maker needs to hedge that position. They need to go in and buy that position, a certain percentage of it. It's delta based. I won't get into wonkiness of it, but they need to buy stocks. That could force a short squeeze. If a short squeeze begins, these guys here, the smartest guys in the room who aren't at the party yet, they're still selling. They don't have capital. They're just building it now. They're licking their wounds. Woe is me, woe is me. They're going to have to start buying and chasing the rally. And that is going to be a rip your face off short squeeze. And we'll be ready for it. So IWM on a seasonally adjusted basis. We are heading into, this is 23 years worth of data. October, which is usually higher by 67%. That's probably not going to happen. But that just tells me that the 78% probability over 23 years that we're going to close positive in November, that's probably going to move up into high 80s, low 90s of probability. And December perhaps gets bumped up as well. We'll see. Now, in terms of the triple Qs, I don't like the triple Qs. I like the small caps better because they've been beaten up. Seasonally, the small QQQ has a good November as well. They're not going to close up in October. And December is a little bit of men's and men's. So me, I like the small caps going into the year end. A lot of the tax loss selling has probably already occurred. So I'm not too concerned about that. So I like the small caps going into the year end. Franklin, you're welcome, pal. Talk to you tomorrow. Bob, isn't Boyle and UNG both almost the same? You're correct to a certain extent. Yes. Boyle tracks nat gas spot price, as does UNG. Boyle is a leveraged ETF. It's either 2 times or 3 times, I forget. But that's so while it tracks spot price and it tracks UNG, the volatility is much, much higher, 2 or 3 times greater than that of the UNG because it's basically a derivative. It's an option on an option. They need to reprice them every single day. So it's very, very volatile. So they're different in their structure. They're the same in terms of the commodity that they track, right? So the charts will look the same, just the rate of change is much different on both. The biotech ETF, that was LABU. Daily chart. This is not a bullish key reversal. This is a bullish reversal, a bullish key reversal. There's a difference. It's my own ridiculous, obsessive, compulsive way of doing things. But the fact that we didn't close at the highs of the session, it does not qualify as a bullish key reversal. A bullish key reversal closes right at the highs. That shows buying right into the close, shorts covering, buyers scrambling to get in there. We didn't have that today. We closed slightly off, but still a good day. All right. So SBSW, gold mining name. Stillwater Limited. This is a DBA. Really be very, very careful here. I've been in this business a long time. Pikes Peak was a pimple when I got into this business. How do I get this off? There we go. No, that's not what I wanted. They got to clean this up here. There we go. They got to make that easier. There's only one peeve I have about TrendSpider. That's it. All right. So SBSW, the weekly chart. Here's the thing, is that I've never looked at this stock before, and if you're wondering where this line come from, it's the algorithm. Take it off, put it back on, folks. This is TrendSpider. Link below. 35% discount code or better on their website. Go check it out. Anyway, this stock broke down. You could see here again. Green support, blue, red resistance. This is the algorithm. And it's saying that we're at support at current. Problem is that we have a lot of volume here. And it may break. I like the price action today. Good reversal day. Closed up in a weak market. But I would be very, very careful. I don't know this company, so be very, very careful. See that, Jody? We're becoming more and more professional here with our production staff. We have three of us, me, myself, and I. Yes. Thank you for the comment, though. LABU. Yes, correct. Somebody from Twitch. Hey, hello. Sorry for bothering you. I want to offer. Oh God, give me a break. Block. Okay. Moving on. SBF looking good. It's looking good. But again, if this is a gold mining stock, be very, very careful. Dollar up, equities fall. This could fall as well. MSFT. See, I thrive on the positive reinforcement. I don't get much of it because I don't earn it that much, but I thrive on it. My production skills, they're getting incrementally better. My speaking skills, not so much. State of the Yodi, thank you so much. God bless you. Love it. Made my day. All right. Okay. Microsoft. This is a weekly chart. We're up on the week. The problem is that the market is sending us signals. What's that signal? We're topping out, and we have a ton of resistance above. How do we know we're topping out? Simple. And when I say this stuff, I'm just talking probabilities. I'm not talking in terms of guarantees. As soon as I get cocky in my tone, all of a sudden, the market does the exact opposite of what I was talking about. All I'm talking about right now are the probabilities. The probabilities are setting up that what we're seeing here is a double top. You want to argue that we broke back out? Fine. Now we need to hold it because the market is saying that we have a lot of resistance at 339 per share. Now, if we close above that mark, I'm going to be the first guy to say, guess what? You got to buy Microsoft. You got to buy it. I'll change my tune on a dime, and I'll admit that I was bearish. But right now, the charts are saying the probability, no guarantee, the probability is that with the market weak, Microsoft earnings in the rearview mirror, they bought the news, they bought the anticipation of earnings. Now they're selling the news. And what did you see today on a daily time frame? Not much of a follow through here. In fact, none. It gapped down. So not a good chart. It's holding support. I suspect that it's probably going to break lower. One trading day left to go. Maybe it rallies back and moves to new all-time highs next week. What do I know? I'm just saying that the probabilities are we go lower. OLLI. Ollie's Bargain Outlet. I love that name. I want to buy the stock to say I own it. Ollie's Bargain Outlet. I love the chart. We have a weekly breakout in a weak market. Who are these guys? Great volume last week. The market's telling you you have a ton of support down here at that rising moving average. $70.84. That's your stop loss right there. Close down below that mark. You got to get out. So your risk is very defined. You're breaking out. Daily view. The only thing I don't like are all these topping tails. So what this tells me is not that I wouldn't buy the stock. I think that we need to do a retrace here, maybe consolidate a bit. What this chart is telling you that is that while buyers outweigh sellers, the sellers are moving in. All these guys back here, they want their money back. Simple as that. Nothing wrong with the company. It's just a matter of backing, filling. So this needs a pause, needs consolidation, needs another run. Sorry about that noise. And it will break out. I like it. GOG. I think it was GOG that he wanted, not GOGL. It's going lower. I believe they wanted the price support. I'm eyeballing 116 per share, give or take a few dimes. Doesn't have to be exact. This could hold as well. You have a volume shelf here. $107.64. That may hold. Volume is very heavy. I think that we are going to retest these support levels. And hopefully it comes very, very soon. Now, we did bounce. It's a daily chart. We did bounce over support level. Can this consolidate? Is the selling done short term here? Maybe. Sure. I'll buy that. But right now, the path of least resistance remains down for GOG Alphabet. Lastly, 3M. They have reported earnings. I had expected a better looking chart here. You have a lot of resistance above at this level at around, let's call it $91 per share. That's a critical resistance level on 3M. Daily view. Now, let me pause here for a moment. The weekly chart is up, and it's up on pretty good volume. One trading day left to go here. So that's bullish. But clearly, these topping tails are saying there are sellers above. Daily view. Down today, holding the 9-period moving average. I wouldn't be a buyer. I would be a buyer on a breakout above $91 per share or on a pullback to around $85 a share, $86 per share. That's it for tonight, folks. My voice is going. Thanks for being here. Like, subscribe. Don't forget about the 30-minute chart club. We're going live on Saturday. Link below. Join our opt-in email list. You can opt out anytime. And we'll be talking about our small account, how we did this past week, and what do we plan on doing the next trading week. I'll see you there. Everybody have an awesome and profitable trading day tomorrow, an amazing weekend. Take care. Be well.